All right, if you have received a loan estimate and do not understand what you're looking at, this video is for you. Today I'm going to teach you what to look at on your loan estimate, common questions people have, and how to review it for accuracy. Here is a sample loan estimate that we're going to go through. This is all just kind of test stuff, so obviously numbers will apply to your specific situation. This is kind of like the meat and bones of your payment, your costs of the loan. So you really want to understand what your numbers are. And this is a lovely government form that replaced the good faith estimate and HUD 1, if you are familiar with those terms. So loan estimate also can be called an LE. Usually you won't get this until you've actually got your initial disclosures. You might see a different format from your lender with like just your quote before you go under contract. So this part usually looks different than what I send to my clients because we have rules on when we send this and how we send this, etc. This is the first page. You want to look it over and check it for accuracy. One thing I do always tell people is if this is your first loan estimate you've received, this is the starting off point of your loan. As things change, you'll get an update. Oftentimes the first one may be a little bit over disclosed or isn't totally 100% accurate. There's things that happen throughout the process. We update as we go. But let's go over how to read it so you can make sure that it's correct. So first thing you want to do is check your names are correct, property address, sales price. Again, these are all terms of your contract. The top right corner is going to have the basics of your loan. So in this scenario, first things, loan term, 30 years. That should match whatever you guys talked about. The purpose will be purchase or refi. Product and loan type. Product means is your rate fixed or an ARM? And is it conventional, FHA, VA, or some other kind of loan? This should all match what you guys have been talking about with your lender. And is the rate locked? This time it's no, for example. If it was yes, that would be marked and it would say until a date and time. So what that means is your lock is good through that whatever date listed there. All right, first loan terms, this will be your loan amount. So sales price minus your loan amount is what your down payment is. Interest rate, principal and interest, monthly principal and interest. So this is just that principal and interest portion of your payment. Can this amount increase after closing? If you're doing a fixed rate loan, these should all say no. Also, is there a prepayment penalty or balloon payment? Those should also say no unless you're doing a different kind of loan, maybe a land loan or something like that will have these. But I do get this question often. Very few loans have prepayment penalties or balloon payments anymore. A lot of that stuff went away post 2008, but it should confirm that right there. If you are doing a loan with a prepayment penalty or balloon payment, just make sure you're clear on what the terms of that are. Okay, this is where things start to get confusing. Okay, projected payments. So in this loan scenario, this mortgage, they're only doing 5% down. So they have monthly mortgage insurance. So this first column is showing the total payment with mortgage insurance. So principal and interest, mortgage insurance, and the estimated escrow account. So this loan is also including their taxes and insurance in that payment. So the total mortgage payment will be $3,686. On a conventional loan, once you reach 20% equity in the property, the mortgage insurance will go away. So in this scenario, the second section, what you're looking at is years 13 through 30. If you just make your minimum payment, keep the loan forever, on year 13, that mortgage insurance will go away, and now the payment will drop to $34.16. Most people don't get that far in their loan, but that's what it's showing you. Estimated taxes and insurance. So this is the escrow portion of the payment. A lot of times people think they need to add these two together. That's not what you're doing. Your total payment is this $36.86. This portion is showing you this is the portion of your payment that can change over time. So is it included in your escrow account, which means is it included in your payment? Yes. If that is included in your payment, you'll see your payment change over time as your taxes and insurance change. Or if you shop your insurance and you switch providers, all those kind of things. Other would be if you had some other feature of your loan or property, such as an HOA, would show up here. So this is a common question I get. The total payment is this estimated total monthly payment right here. Okay, and then it summarizes the costs of the loan and your cash to close, which is detailed out on page 2. Here's the breakdown of all the costs of your loan. So section A are your origination charges. So these are the fees that are going directly to your lender. So in this scenario, it costs them $208 to get their interest rate, and there's an underwriting fee of $12.95. Section B, services you cannot shop for but are required by the loan. So these are things that the lender will do for you, such as pull your credit report or order your appraisal, but they are through the lender's approved vendors. So it's a cost of the loan, but you can't go find, we can't use annualcreditreport.com for our credit reports. It has to be through our vendor, and our systems all sync up and all that kind of fun stuff. Section C, services you can shop for. For properties in Utah, this will be our title fees. So title company for us is in Utah and many other states, but we'll close with a title company. Some states use attorneys. This might look a little different. So this is all based off of Utah stuff, but you are free to look for who you want to use for your title company. Oftentimes on a purchase, that will get referred to you by your real estate agent. But that is something you can shop for. We don't control that. D totals up those 3 sections. We'll go back up to the top right. Other costs, so in Utah, our deeds total $80. Prepaids, this is the section you would have if you have an escrow account. So in this scenario, it does have an escrow account, so we're going to prepay the homeowner's insurance up front for the full year. We're going to collect interest. Interest is collected from the day the loan funds through the end of the month. That's just how they get you on monthly full complete billing cycle. And then your property taxes. In Utah, our property taxes are due every November, so this number will change depending on when you close. G also is additional stuff to your escrow account. So a lot of times collect an extra couple months of homeowner's insurance to just have some cushion in your escrow account for in the event if those numbers go up. And then other, some title fees fall into this category. Other things in here would be like HOA dues, HOA transfer fees, anything that kind of doesn't fit in these other previous boxes. Okay, so I totals up the costs on the right-hand side, and then J totals everything. So in this scenario, the total costs of the loan are $8,747. The down payment requirement is $25,000. Deposit, this would be your earnest money. So we said they paid $2,000 in earnest money already. And then other credits. We'll say the seller is covering $4,000 of your closing costs for you from their side. And if you had any other, like a lender credit, that would show here. This is just kind of the summary of all of that. So total estimated cash to close is $27,747. If you pay for things out of pocket up front, like your appraisal fee, then that gets removed and shows I'd already paid that and would get deducted from your total costs. Page 3. A lot of times people don't spend a whole lot of time on this, but should be stuff you want to, a few things you want to look at. So obviously your lender's information, loan officer's information is up here. These are kind of tools they offer so you can compare different kinds of loans. Your APR, I'll do another video about APR, but in this case it's 7.202. Total interest paid, what that means is if you keep this loan for the full 30 years, you just make your minimum payments don't pay any extra principal, never refi, any of that kind of stuff. That's how much you're going to pay over that full 30 years. It's very rare that someone keeps their loan for actually a full 30 years. Other considerations, just kind of saying other disclaimers for the loan. You'll get several other disclosures that go over all of this, but a couple things. Assumption: this loan is a conventional loan. Conventional loans typically are not assumable. If you have an FHA or VA loan, it might say that it is assumable. What that means is people can assume the terms of that loan. Again, topic for another video, but you should understand that feature. Late payment. This is pretty standard for most mortgages. Your payment is due on the 1st. They'll give you a 15-day grace period. After that, they'll charge you, in this case, a 5% late fee of your principal and interest payment. That number will change depending on what kind of loan you have. Servicing, if they intend to service your loan or not, or transfer your servicing. Every loan will reserve the right to change the servicing of their loan or sell your servicing of your loan. So sometimes people are really interested in keeping their loan like with their bank that they have their checking and savings account with. You can start with that. That doesn't mean it's always going to stay there. So that covers the loan estimate. Hopefully that answers some of the basic questions that you have. If you're under contract on a loan and you have specific talk to your loan officer, or if you want to compare a quote, please feel free to reach out. I am licensed in Idaho and Utah. Most of my content is around Utah, but a lot of this stuff applies to Idaho as well. Hit me up if you need anything, and please watch for my next video.